It can be difficult for investors to invest in individual companies and expect to get good dividend due to high stock price and low dividend yield. So today we have come up with a list of 7 exchange traded funds that pay out dividend monthly and have a good dividend yield. The advantage of monthly dividends is that they provide greater growth potential in compounding effect after reinvesting the paid dividend. But one must not invest in any ETF just for the sake of its dividend. We must also look at its expense ratio and check its profitability. So let's start with the first on the list. Number 1. iSHARES Preferred and Income Securities ETF (PFF). This is a very good alternative for high dividend yield stocks. PFF mirrors the performance of S&P 500 US Preferred Stock Index. It has a well-diversified portfolio and no security has a weightage of more than 2.5%. It has a massive net asset of $16.42 billion. Its expense ratio is 0.46%, means for every $10,000 invested, you will be charged with $46, which is very good considering the annual dividend yield of 5.47%. As of June 2022, it is trading at $32. Number 2. INVESCO KBW High Dividend Yield Financial ETF KBWT. KBWT is based on one of the prestigious KEEFE, BRUYETTE and Woods NASDAQ indexes. KBWT is heavily weighted towards publicly held financial companies. These type of companies perform better during rising interest rates. KBWT has a net asset of $400 million. KBWT has a very high expense ratio as compared to other ETFs. It is 2.59%. It means for every 10,000 invested, you have to pay $259. But this high expense ratio is offset by a similarly high dividend yield of 10.74%. It is priced at around $16 as of June 2022, which means that you will get $1,000 for every 10,000 invested annually. Number 3. INVESCO Preferred ETF. PXG tries to replicate the performance of ICE BOFAML Core Plus Fixed Rate Preferred Securities Index. This index has a major focus on financial sector with more than 200 preferred stocks. PGX has a net asset of $5.8 billion. It has an expense ratio of 0.51%, which is quite low. The dividend yield is 5.51%. It is priced at around $12 during June 2022. Number 4. WISDOMTREE US High Dividend Fund. DHS follows WISDOMTREE High Dividend Index. This index features companies with high dividend yield and high trading volumes. The companies are diversified among sectors such as real estate, healthcare, utilities, IT, and consumer staples. The net assets of DHS is $1.17 billion. It has a low expense ratio of 0.38% with a dividend yield of 3.65%. It is trading at around $82 as of June 2022 and has a good growth for the past 5 years. Number 5. INVESCO S&P 500 High Dividend Low Volatility ETF SPHD follows S&P 500 Low Volatility High Dividend Index. This index focuses on stocks that pay high dividend and have stable prices with low volatility. SPHD has a net asset of more than $4 billion. Its expense ratio is a measly 0.3%, which means for every $10,000 invested, you will have to pay $30. It has a dividend yield of 3.59% and it is trading at $43 as of June 2022. Number 6. Global X Super Dividend US ETF. DIV was established in 2013 and follows the performance of 50 equally weighted common stocks, MLPS, and real estate funds within the US. These securities have low volatility and high yield. DIV has a net asset of $722 million. It has a slightly high expense ratio of 0.45% with a good dividend yield of 6.25%. It is trading at $19 currently. Number 7. Global X Super Dividend ETF. SDIV tracks an index of 100 equally weighted companies that rank among the highest dividend payers around the world. SDIV has a net asset of $827 million. Its expense ratio is 0.58% with a dividend yield of 11.16%. The current trading price is around $9. This means that for every 10,000 invested, you will have to pay $58 and you will get around $1,000 in dividend. These were one of the best dividend paying ETFs that will pay you money monthly. We have talked only about the dividend yield and not about the financial background of these funds. So before investing, do check if everything is right with the fund. Thanks a lot for watching this video. Do like and subscribe to show your support. We'll keep making more videos on earning, saving and investing money. One stop to all your money problems. See you in the next video.